Hi everyone, Sam here again. We are with Mike at Gravitate today, talking startups in our Smart Start series. Hi Mike.
Hello.
Hello. So from the point of view of a startup, I think back 7-8 years now, and we went out, we bought a laptop, we worked from home, and just went out there as a plucky young business, try and get some clients.
Yeah.
But I know at that time for us, we were very clear about speaking to an accountant, business planning, forecasts, that kind of stuff. Probably to convince our wives that we weren't crazy enough to do this, But from a point of view of a startup, you'll have seen good startups and bad ways to do a startup, if you like, from an accountancy point of view.
Yeah.
It's just so those thoughts at that very early stage. Any tips or thoughts on what should people do and what shouldn't they do?
Yeah, I think one of the biggest things is to set up for the right reasons. Like have a really good reason why you're setting up, which is client centric. So set up because you want to solve a problem for that client or that industry. You think that, there's something you can sort of add value there.
Yeah.
Rather than replicate. And I think if you can do that, that really is the difference between a business that succeeds and does well and one that either doesn't do as well as they thought or doesn't succeed.
Yeah. Okay.
Yeah.
And from an accountancy point of view, what do people typically do? What do they typically get wrong? Or what would you advise?
Obviously the numbers. They always get the numbers right. And I've seen some fantastic businesses, some fantastic business owners that was terrible with money.
Really?
And had they could control their cash flow, their ins and outs, who they owe at what time, they could have a really good, solid business and lifestyle. And when I talk about knowing your numbers, it's not always just what's coming in and what's going out in terms of customers, sales, and your cost that you're going out. It's HMRC.
Yeah.
The biggest thing that people forget is the money that you receive isn't always yours.
Yes.
We've got 20% that needs to go to HMRC for VAT, and then you've got people's wages and then corporation tax, and not knowing what those numbers are at any one time and operating off your bank balance is dangerous.
Yeah, absolutely. And do you find people typically engage with an accountant early as a startup or not?
No, and there's real disadvantages of not doing that, especially if you get the right accountant. So some accountants you might engage really early and still get no value up until doing the work. If you get the right accountant, they can become instrumental in giving you advice throughout that period of time from start up to 12 months when you get to year end to 9 months when they have to file something. If you get somebody that's an accountant's not engaging with you, you don't hear from them from the start up until having to file something. You get a good accountant that wants to talk to you throughout that journey, they'll be there from the start. And it can be silly things of, advice of, what do I need to do? I feel a bit uncertain how to protect myself, and you can what have you thought about insurances and stuff like that. You can really good accountants do advise their clients throughout that journey. Yeah.
I know when we started, we got advice, but then it probably turned out on things like company structure, LLP versus limited company versus sole trader, and that kind of advice. I think probably reflecting back, the advice we got was probably not what we maybe should have done.
Yes.
And we ended up changing it.
Yeah.
Ended up changing the company structure within the first couple of years because of that. I guess you'd probably see all sorts of stuff going on with that.
People just want to start, and the easiest way to start is just give me money into my current account. And it's not the best way possible. So you're right in terms of that, get the right structure. We often see the other side where people start with really complex structures that they don't need. They've not really thought about the 5-year or 10-year plan. And when we set up our business, we set up with the whole purpose of what we want to achieve as the end goal. And not a lot of people will ever do that.
No.
I don't think you're going to get that to start off with, but if you get that advice early enough, it won't be as expensive to implement than if you're 3 or 4 years down the line.
Yeah. And I guess a lot of businesses start probably because the founder's good at something.
Yes.
They've got a niche or they're good at something.
Hopefully they do.
Ideally. But they're good at what they're good at, but they're not necessarily then good at running a business.
Yes. And that's so important. I quickly get to conversations with the clients to really understand if they want a lifestyle business or they want to grow a business. Because you have a lot of solo people running companies that it isn't actually worth anything because it's them that's running it. So then my advice would be geared towards let's try and extract as much personal value as you can on an ongoing basis, because your exit value is not going to be there.
Yeah.
Or maybe I can convince somebody to actually maybe build it into a business that they can sell because they're building something thinking they can sell it, and they actually can't.
Yeah.
So it's having those honest conversations and caring.
Yeah, absolutely.
To tell them that.
And how would somebody know? So most people, they're going to say, ask their mate or their mate in business, or what accountant do you use? And you know, they'll probably get referred to an accountant from that point of view.
Yeah.
But as a startup, what questions should they be asking of an accountant to sort of establish whether they're the right accountant for them?
Yeah, I mean, it depends on how much confidence you've got in what you're going to do. So if you've got, previous experience, you know this is going to work no matter what.
Yeah.
Then I would say you don't need an overly engaging accountant. If you're starting something new, as obviously the topic we're talking about, and it's new for you, you want a lot of support. So I'd be asking my friend Dave down at the pub, ChatGPT, whoever it is you decide to ask. I'd be asking, how frequent does that accountant talk to that person? Yeah. Because that's what's going to be the deal breaker for you. Yeah. It's always going to be a cost, but how much value are you going to get out of this person, and are they going to support you on that journey? I think that's crucial. Okay, cool.
And obviously when historically accountants complain about people collecting bags full of receipts and all the rest of it, do you want to just talk about the tools that are available to people now as startups from a digital accountancy point of view?
Yeah. So, I mean, years ago you could do Excel, that used to be the typical way. But now we've got loads of tools on the market. So we've got your core accounting function, could be something like Xero or Sage. Yeah. And this is essentially, you plug your banks into it, it pulls in all the transactions, and you can say that's income, that's expense, etc. That's really simplifying it.
Yeah.
So that's that core function. And then you've got Dext, that helps you to automate processing documentation. So let's say you get an invoice from your accountant, you can send it into this tool and it'll read the supplier, the invoice number, the date, the amount, and it'll shove it into your accounting software. So when you're a startup, you don't have much time. Yeah. So having tools like that is really helpful. And expense management, you've got Pleo, which will help the day-to-day, buying a coffee, drink, mileage, that sort of stuff. Yeah. It's just in your pocket, you can submit those expenses.
Okay. And those apps sort of plug into Xero and Sage and people.
So there's very little in between that you have to do. It usually just pushes and pulls data.
Yeah, fab. And I suppose from I know we've discussed this in the past, where you talk about charging structures and so on for accountants. And I still hear lots of clients who complain that they don't know how much they're going to pay their accountant until after their year end. Yeah. You guys have got a clear charging structure, but I guess for a startup as well, they're maybe going to want to know how much it's going to cost them.
Yeah, and I think, if you're starting up and you're going to get quotes from several accountants, they will all be different. Yeah. There's no standard structure, but generally there's usually a reason behind the differences, and there's sometimes not a reason behind the differences. Okay. So you need to know, well, if I'm paying more, why am I paying more? So what we always say to clients is you should be getting a breakdown of what you're paying for. So if somebody's saying, I'm going to charge you £300 a month, and that's it, to me that's a red flag, because I'm like, what am I getting for £300 a month? I can't compare that to the next quote that might be 400. The 400 actually might have 2 hours a month support one-on-one with that accountant. It'll really help push your business forward. But if you can't see that, all you will see is £100 difference. Yes. So always getting breakdowns, and then you can compare those service lines. Understand what those service lines actually mean. Ask lots of questions because it's new to you. So you need to understand what each one is going to do so that you can compare. Yeah. And then you make an informed decision to say, I want to pay £100 more because those two service lines that they're giving me are what I think I need in setting up this business. Yeah,
fantastic. Yeah, I know when we catch up, I have to come away feeling like I've been through a coaching session from a financial point of view, obviously. But obviously, from my point of view, if we're advising startups, all of this series basically was saying to people, whatever your idea is, whatever you're starting up with, get some advice. And I think you'll be able to quickly tell if the accountant you're dealing with is somebody who's going to help you facilitate your business, or if they're just going to turn up at the end of the year with your accounts and a bill. Yeah,
and I always say there's no wrong way either. No. So people talk about this turning up at the end of the year with a bill. Yeah. Sometimes that works it works for some clients. I would say, we're not for everybody. No. And that's fine, because we know who we are for, and we can service them in the way that we want to and they need. Yes. So just because you might get that type of account, it still does work for certain, but it's not our client. It's not who we want to work with either.
But also, I think from an advice point of view, I know when we started, we were buggers for just trying to do everything ourselves.
Yeah.
You know, we were working all hours, doing every email, every invoice, every claim, doing trying to do the accounts, the month-end accounts, and all the rest of it. Yeah. And actually, I think you quickly realise that you can be busy fools.
Yeah.
And if you do take a bit of advice, it doesn't always have to be expensive advice, but if you do take a bit of advice, you can free up yourself a lot more to spend your time doing the bit that actually pays your wages.
Yeah, I mean, the best way that I demonstrate this to a client, and it's usually bookkeeping, it's usually the one that you start doing, or some family member does it, and they stop doing it as often, as good, and not on time either, so you miss VAT returns, etc. So what I always sort of say is, if you're doing your own bookkeeping, how long does it take you? What would you earn if you charge yourself out for those hours?
Yeah.
Compare that to the difference of what it'll cost me to do your bookkeeping for you. And that's a lost opportunity, essentially.
Yeah.
So if you pay us £25 an hour to do bookkeeping and you can charge out £250 an hour, it's crazy that you're doing that.
Yeah.
But in the early stages, you're not usually time poor.
No,
so you tend to have a bit of
cash
time.
Poor and time.
Yeah. So it flips at some point. It's recognising that, which is just because I've always done it this way doesn't mean that'll hold you back at some point ultimately.
Yeah, absolutely. Okay, that's great. Yeah,
good stuff.
All great advice.
Hopefully.
Hopefully. Thank you for that. I found that really useful. I hope you did too. And we'll see you on the next one. Bye for now.
Thank you.